Welcome back to another episode of Fire Trail, the show that's all about helping you achieve financial independence and retire early. I'm your host, Xiao Yu, and today we're diving into a hotly debated topic, paying off your mortgage early, even if it comes with a low interest rate. You might be wondering, why should someone want to pay off a low interest mortgage early when that money could be used elsewhere? Well, let's consider three major benefits. Number one, peace of mind. Picture this. You wake up knowing that you own your home outright. No more monthly payments looming over your head. Now, think about the stress that often accompanies debt. Even if it's a good debt, like a mortgage with a low interest rate, that monthly payment can feel like a weight on your shoulders. Paying it off early removes that burden. It's the freedom from the anxiety of meeting mortgage deadlines, the fear of market fluctuations affecting your ability to pay, or the worry of unexpected financial downturns impacting your home. Peace of mind also extends to life changes. Without a mortgage, you're more flexible to navigate unexpected events like job loss, health issues, or economic downturns. You won't risk losing your home due to financial setbacks. This sense of security can positively impact your mental health and overall well being, allowing you to focus on other aspects of life without the constant financial worry. Moreover, this feeling of ownership can translate into a stronger connection with your home. When it's completely yours, there's an emotional attachment that goes beyond the financial aspect. You're invested in a place that truly belongs to you and your family, creating a sense of stability and permanence. Ultimately, peace of mind is about having the freedom to live life on your terms without the weight of debt dragging you down. And that, for many, is an invaluable aspect of paying off a mortgage early, regardless of the interest rate. Benefit number two, savings on interest payments. Despite having a low interest rate, paying off your mortgage early can save a significant amount in interest over the life of the loan. Consider this example. You have a $300,000 mortgage at a low interest rate of 4% over 30 years. Your monthly payment would be approximately $1,432. And over the life of the loan, you'll pay a whopping $215,609 in interest. Now, let's say you decide to pay off that same mortgage in 20 years instead of 30. By doing so, you not only eliminate 10 years of mortgage payments, but also significantly reduce the total interest paid. In this case, your monthly payment would increase to around $1,849, but the total interest paid over the 20 years would only amount to $134,266. That's a saving of $81,343 compared to the 30-year term. By paying off the mortgage early, you're cutting off a substantial chunk of interest that would have accumulated over the additional 10 years of payments. This is money you get to keep in your pocket and allocate toward other financial goals or investments. Another aspect to consider is the overall cost of the home. By paying off the mortgage early, you effectively decrease the total amount paid for your home. That $215,609 in interest in the 30-year scenario is money you won't have to spend if you pay off the mortgage sooner. It's important to note that the savings on interest payments can vary depending on the initial loan amount, interest rate, and the extra payments made toward the principal. However, the principle remains the same. Paying off your mortgage early can lead to substantial savings on interest, allowing you to allocate those funds elsewhere in your financial plan. And finally, the number three benefit, increased financial flexibility. Increased financial flexibility is a major perk of paying off your mortgage early, even if the interest rate is low. Let's break down what this means. Number one, when you no longer have a mortgage payment to make, that money becomes available for other purposes. For instance, let's say your mortgage payment was $1,500 a month. That's 18,000 a year that could now be directed towards other financial goals. Second, without the weight of a mortgage, you can consider more aggressive investment options. You might choose to funnel that extra cash into retirement accounts, stocks, bonds, or real estate investments. This extra capital gives you the freedom to explore opportunities that may yield higher returns. Number three, building up your emergency fund or savings becomes easier when you don't have a mortgage draining a significant portion of your income. Having a solid financial cushion can protect you from unexpected expenses or job loss in the future. Number four, some people dream of traveling, starting a business, or pursuing further education. Without a mortgage payment, you have more financial flexibility to chase these dreams without worrying about a hefty monthly obligation. Now, remember, the flexibility gained from paying off your mortgage early allows you to adapt to life changes more easily, whether it's taking a career break, supporting family members, or navigating unexpected circumstances. Having extra financial resources at your disposal provides a sense of security and freedom. So, is paying off your mortgage early the right move? Ultimately, it depends on your financial goals, risk tolerance, and overall financial situation. While a low interest rate might seem like a reason to delay paying off your mortgage, the peace of mind and financial freedom that come with being debt free can be priceless for many. Remember, personal finance is personal. What works for one person might not work for another. It's essential to weigh the pros and cons and make an informed decision that aligns with your financial goals and lifestyle. Thank you for tuning into this episode of Fire Trail. If you enjoyed this episode, don't forget to subscribe to the podcast and leave us a comment. Thanks for listening. This is Xiao Yu, wishing you all the success and happiness on your financial journey.